Welcome back to another episode of the M&A Guy. I'm your host, Brian Franco, founder and CEO of Meritage Partners and author of The Inevitable Exit. Today's podcast is pretty special. If you tuned in last week, you'd have heard from Lance Fair. Today and this week, we're going to be talking to Christian Malek of Novastone Capital Advisors. I've titled this episode, Operator-Led Buyouts and Successions, a New Path Forward for Growing, Selling, Scaling mid-market companies like yours. And I'll tell you, private equity can feel like a mystery or worse, a threat. But I'm here to tell you the truth is far more nuanced. And the opportunities in the lower middle market are there. You just need to know how to tap in and capture that. And that's why I've asked Christian Malek to join us to give you that inside scoop and that inside playbook on how to make that all happen. So Christian, thanks for being on. Appreciate you coming out, driving out to see us today.
You're welcome.
Yeah, and we try to make the weather good. Last week was terrible. It was raining. It was awful. So I'm glad you're here. Sunny day.
Beautiful day.
Beautiful
A bit windy, but beautiful.
But you're not too far from here, so you get this beauty all the time. So tell us about your vision with Novastone Capital, because I mean, you have done deals internationally in multiple continents in a variety of industries. What was your vision when you started the firm?
Yeah. So my grandfather, so a bit of myself. So my background is in investment banking.
Yes.
My father was working for the Swiss embassy, so I moved around internationally. Yeah. My grandfather, he was an entrepreneur. He had his beautiful business in Zurich. And of course, he loved his business so much that he never wanted to give up or resign or think about who's going to come next.
Yeah.
And my father,
that story.
We were traveling. So, we were in Indonesia. Yeah, we spent a few years in Indonesia. Then we spent many years in Latin America.
Yeah.
And there was definitely no succession planning whatsoever. Yeah. And then suddenly my grandfather passed away while he was the CEO of the business. Mm-hmm. And that was totally a disaster for not only the business, but also for the family. And that really, make a huge difference in my career. Yeah. At some point, many years ago, I heard about the concept of search funds and, how you can actually go and try to find a business to buy it. And you get a sponsor to do that and so on. And from that idea, we created Novastone Capital Advisors. It was called before differently. We had a different program. Yeah. But at some point, we decided that actually if you could recruit mid-career operators, top-notch, to actually then spend a couple of years searching for a family-owned business that is actually facing a succession issue, that could be the solution, right? That many business owners are looking for, because you just want to give it to somebody else that doesn't have experience or knowledge in that particular sector, doesn't know how to really manage the company when acquired, or they just acquired and they have to just go and search for a CEO. That's exactly why we decided to launch that program a few years ago. We started in Europe.
Okay.
So we started in Europe, and 2021, after the COVID, we decided to move the program into the US and Canada. So that's the main thing of the program, is going after beautiful family-owned businesses that are facing a succession issue and bringing a solution to those business owners.
Huge need, especially right now, baby boomers and business owners, whether they've been in business for 30 years or 3 years. There's this massive transfer of wealth, and most of that wealth is held up in real estate and in businesses. Estimated 10 trillion in the U.S., right? But the fact that you're focused on that gap is huge. But I didn't realize this till sitting here with you. But those that have seen me speak on stages and on even this podcast, my story is a little similar. My father is disabled today. He's likely in bed right now. And he was an amazing entrepreneur, amazing investor. And we saw as a family his business deteriorate with his health, and to the point where he had to close the doors. And that really inspired me to write my book, Inevitable Exit, because I didn't want to see families go through that, see what my mom firsthand went through, my father, and me and my brother. We stepped in for a time to run the family company, but I mean, I was not even 18 at that time. I was doing the best that I could to step in.
Right.
And I was going to school, and eventually my brother and I, we pursued our own dreams. But yeah, that's a very similar story. I did not know that till now.
And I don't know if you know, but baby boomers were the generation that created the most number or the largest number of companies ever of any generation. And jobs. And many of them don't have kids. Many of them have kids that are relatively young for them to take over. And most of them have kids that are not interested in their business.
Yeah, they're not interested.
We're talking about sometimes what we call boring businesses, right? Elevator maintenance company in New York. While your kids are learning about AI and other things, it's not that attractive for them. Now, we focus on relatively small companies, right? So companies that are under 50 million in revenues, right? Let's say from 10 to 50 million in revenues, that's the sweet spot.
Yes.
Why is that? Well, those are exactly those companies where it's more difficult to operate, right? Those are small in nature.
Correct.
Cash is king in these cases, right? So these are companies that, are not floating in cash all the time.
Yes.
They're relatively small. It's hard to also attract talent to manage those companies. And that's the key point. Right? For us to attract talent, we have to offer the operators the opportunity to earn equity in the company. So they have actually an opportunity to earn up to an incentive, up to 20% equity in the company that they will then run.
That's right.
Right? So that's the way you can attract top talent. Otherwise, imagine the average transactions that we do, 25 million in revenues, 5 million EBITDA, founder led, right? So the founder is extremely motivated. By definition, is a very incredible person because he created a business that is making 25 million a year. So that's amazing already on its own.
Exactly.
Right? So it has that level of motivation and engagement. How are you going to replace that person? You think that traditional private equity that will come and buy and then try to hire a CEO, maybe offer them a 3% package, is going to work? It's hard.
It's hard.
Right? Because it's a small company at the end. If you are in the market for like CEO jobs, maybe you want to aim for, I don't know.
Correct. Yeah.
Coca-Cola, Apple.
3% of what?
Right. 3% of what? So therefore, there is that huge gap in the market today, which is very critical to solve, because at the end of the day, this is the main driver of our economies in the West. Like all these thousands of family-owned businesses that are now at some point facing a problem.
Correct.
Right. And there's not the right solution. So our aim is to be able to grow and solve as many as possible of those succession issues.
Yeah, because there's the succession gap many owners ignore, right? And we've had the opportunity to work with you and your team on a recent closing a few months ago with Horizon Underground and Lance Fair, and a great
amazing business,
great example of the value you guys brought, because compared to traditional private equity, which I believe one day this investment will be sold to a traditional private equity.
Correct. Yeah.
But today, that business was perfectly positioned for Novastone to come in, implant a leader, CEO or C-level team to continue to grow and scale on the trajectory that it was. And so how I see that different, because we had signed LOIs with traditional private equity groups, and a lot of them were saying, look, it was almost felt like they were doing us a favor by coming down to $5 million of EBITDA, because they normally look at 8 or 10, right?
Right.
And so it was, we never want to have that sensation or that feeling like, no, don't do us a favor, right? We want this to be the right investment. And this is what I love about Novastone and what you created, because you grab top talent from the marketplace, you inject them into a company with a playbook, with a strategy, with the capital to grow and scale that business. And I mean, did you see that coming into this market? when comparing yourself to traditional private equity?
Correct. In a way, we work for them, right?
That's
we work
true.
for the private equity
That's true.
Companies,
That's
right?
right.
Because what we do is, first of all, it's about legacy, right? Legacy preservation.
Yeah.
So in order to preserve legacy, we need to keep growing those businesses. We need to have someone inside the business that will now have owner level motivation. After that, making sure that that really happens, then you can then talk to the private equities. But then this company is strong enough to survive on its own,
Right.
and maybe might become even a platform for a private equity to then acquire smaller companies, right?
That's right.
Which sometimes are difficult to get sold. Companies that are maybe making 500,000 or
Correct.
1 million in EBITDA,
Or sometimes losing money, but they have
or sometimes losing money,
Yeah.
but they have revenue. So those are platforms. So we create that solution for private equities and also for the talent that we attract. So the mid-career operator, right, which is our most important at the level of NCA or Novastone Capital Advisors. This is in a way also our client, right? So we attract them, give them a career opportunity, and we make sure that they will be successful in their journey, right? And we always say this is a 10-year journey for them. Why 10? Well, as you know, because you know David Kirube, which is Prison on the Grounds operator. He has to. They all have to go through a process which takes up to maybe 1 year for them to join the program. Just that, right? They have to apply. We get 3,000 applications per annum. Europe, US, and Canada, kind of split half and half. And then they have to go through a selection process, and then we select 15, 20 per annum. So it's just a small portion of the applicants that make it to join the program. Then we invest in them, right? So they are full-time dedicated for them to then try to find a beautiful business for them to buy. So we pay them, we train them, we provide them the tool to do that, and then go after a company that actually fits their expertise. These are experts. These are people that has managed, has operated, has been scrutinized, will work with us. And guess what? Not 100% of them will find a business and will close a transaction. So we know that. So we lose some money on some, we make some money on some.
Part of the model.
It's part of the model, right? And I think it's a healthy process. Even if you join the program, probably it's going to be an 80% probability you may end up closing something. There's a 20% that might not close something. Once you close something, that's probably maybe year almost 2, right? So I mentioned before, this is a 10-year journey. So they have already spent almost 2 years between application and closing in the program. And now they're going to stay there for 3-4 years. Make sure that, and we also make sure, so we are definitely involved, make sure that they will be able to transition the company from the seller, the retiring owner. Make sure that they can then also get into the culture of the business, and also finally make sure that they can grow it.
Yes, that's key.
So they will find, so the private equities will come and find a beautiful business, doesn't have a succession issue anymore, is growing, and has a CEO with hopefully a 20% stake in the business. So owner level motivation to them keep growing that business. And that's what we do. And we want to do it many, many times in many industries, right? That's the business model. So we actually serve private equity funds and business owners that need to resolve their succession.
You're that conduit in that what we call almost no man's land, because these businesses, they're beautiful by themselves, but they just need to get to that critical mass. They need to have that C-level team for a larger private equity group to look at that as a platform, to your point, and then continue to scale it both organically and inorganically.
Correct. And the beautiful of our business is that we create so much positive value to each of the stakeholders, right? So for the operator, at the end of the day, this is a relatively unique career opportunity, right? Think of it. They might make 10, 20, million if they do it well. So this is a huge opportunity for them to demonstrate that they actually really could become entrepreneurs. Some of them have been entrepreneurs already in the past, but this is like once in a lifetime opportunity for them. And therefore we get so many applicants, right? So And that's beautiful, just to see them how their dreams come true.
Right.
Managing, even though this is really hard,
Yeah.
I don't want to hide it. They're going to work their ass.
Well, we call this we describe them as baby boomers, right? But, some of them are coining this the silver tsunami, right? And the silver tsunami is business owners nearing this retirement. And, they're at the end of their career. They don't have another 5 years, even 3 years to position the company, the C-level team, to remove themselves from the business, to prepare it. And that's fine because you have that solution.
Well, you're touching an important point, because actually, that's the other stakeholder, is the seller.
Correct.
I'm retiring.
Yes.
I love my business. The employees are family. I want to know who's going to drive this company, who's going to manage it, how is it going to do it.
Yeah.
I want to also transition out relatively quickly.
Correct.
I don't want to stay there for the next 5 years
Yes.
as an employee.
Yeah.
Or I don't want to get paid like just a small portion and then everything is an earnout in year 5. I want to kind of retire.
Yes.
I want to enjoy maybe in my next 5 years, which by definition are my best next 5 years of what I got left, right?
Exactly.
Of your life. Definitely is a solution that works very, very well for business owners that really care about the legacy and really want to just retire and see their company going.
Yeah.
As a standalone company, making it grow. And they normally like also to remain invested. They will roll over a portion somehow, but that's a solution they really like. So, and then for the private equities, I think I mentioned already, right? It's a beautiful solution as well, right? Because then we come to them with a proposal of a business that is growing, doesn't have a succession issue, and has an amazing CEO on top that they couldn't dream of.
So that's what you do for the business.
Yeah.
And for the founder, you allow them to de-risk, take some chips off the table, as we say.
Correct.
You allow them to continue the legacy. And more importantly, because as a founder, you as a founder, and those founders that we interact with, they want to see the employees grow and scale and capture more opportunity.
Yeah.
Because these folks are early career, mid-career, they still have time.
Yeah.
And that's really, you're from all angles, you're satisfying the owner, the founder, the seller. You're satisfying the team that is built under that company, and you're satisfying the future investors, all while continuing to build value for existing investors on the cap table.
Correct. Yeah. For investors, it's a very special program, right? So they have to know about this type of investments, right? Mm-hmm. It's relatively, when you go on a portfolio basis, then it's a very safe investment, right? Yeah. Those are profitable companies. You're doing it with somebody that knows very well the industry. You're not over leveraging the operations, right? So it's usually a 50-50 when it comes to, like, the average price you pay is 5 times, right? So that's the average. Is like, we have 4 or 5 million EBITDA 5 times. That's what you pay. You leverage maybe 2.5 times.
2.5 times of debt, 2.5 times of equity.
That's right. That's right. So, it's a relatively safe environment. Of course, it doesn't mean that it's not hard to then keep those companies. And as I said before, cash is king. That's the number one thing that operators have to do at the beginning when they join the companies anew. Even if they are experts, they have experience in a sector, in an industry, every company is different. Every company is a special situation. They definitely have to spend a year learning about the company, the culture, the problems, everything. Yeah. So they take a year just to learn how to really then, get into the business and run it. And then they start, creating value. We help them. We help them, but at the end, they are the main drivers of every different journey, right? So at the end, for an investor, you have every single transaction is a standalone transaction in a way, right? I bought a company in that industry, in this industry, with that operator. It's a 2-3 year, we will flip it then to private equity, right? And they're willing to pay so that also the CEO gets fully vested. Yeah. Right?
Yeah, because they want that leadership to be continuous in some capacity.
Correct. And that's where the operator is very much aligned with investors, because they actually will vest shares up to 20% only if they actually create value to investors, right? That are sponsoring that transition process.
So I see how you align value creation, but let's talk about some of those lessons you've learned from the standpoint of value creations and sustainable growth, because you've done deals internationally across multiple continents, as we described. But what are those big lessons that you've learned acquiring companies, creating that value and sustaining that growth? And I think you touched on a lot of it. Just, I think part of your answer is going to be finding the right operator and nurturing that operator. But what are some of the lessons that you've learned along the way from value creation after the deal is closed?
Yeah. So we have so far acquired 27. So we have 27 transactions so far closed. We have done a couple of exits. We're working on another 2 exits.
Yeah.
And I can tell you, every single transaction is relatively different, but at the same time, there are common themes.
Yeah.
Right?
Yes.
Relationship with employees, relationship with the seller, cash.
Yeah. Yes.
Culture, client concentration, losing a major client once you take over the company. Those are the things that they have to be very careful.
Yeah.
At the end of the day, it's not rocket science. It's working very hard every day, trying to understand the business, keep the business as it is. Don't make foolish, decisions very early on.
Yeah.
And just keep growing that company, right? Don't overspend and be very careful about your cash flow. Make sure you have lines of credit in case there's a rainy day. Those are the basic stuff.
Yeah.
You don't have to be a genius.
Yeah.
You just have to work very hard,
Yeah.
be humble, understand the industry, grow it, visit your clients, make sure you deliver the best you can to your clients. If you have to digitalize anything from a market, there's always different opportunities. Like all of these companies, in many cases, we have bought companies to owners that are maybe 70, 75. Maybe they spent the last 10 years just thinking about, this is a beautiful, lifestyle thing, right? I don't even want to grow it.
No, they just want to.
I just want to keep it.
Yes.
I keep, flow. Keep the cash flow for them, keep their lifestyle and so on. So in many cases, you find beautiful opportunities to just come in, make a change, and start changing a bit the culture about, look, we really need to, grow.
Yeah.
Because at the end of the day, believe it or not, I believe companies are like creatures. They need to grow. They need to expand. They need to evolve. You cannot just keep them flat for a very long time.
Yeah.
That's a huge mistake.
Yeah.
Companies need to grow. If you want to keep that legacy, they need to grow. So at some point, that's why it's very important to then push for that.
Yeah.
Right.
I like businesses like children, right? But the business that you birth a child, likely the most profitable child you'll have, mostly. But children are also creatures. So yeah, I'm with you.
So you just want to make sure that person that you selected through the selection process will be able to transition.
Correct.
Learn about the business, even though they have experience in the sector, being able to grow it, manage cash carefully, don't make crazy stuff, and then keep that, be very engaged, be very motivated, engage with employees, culture, and just go and then eventually transit to a private equity or a new buyer.
And at that point, Novastone Capital cashes out at some capacity.
That's where we are. That's where we are out,
together.
Not them, right? So as I said before, this is a 10-year for them. For us, it's a 5-year journey, right? So we will stay with them until then. That private equity will come in and buy the company. That's for us the end of our involvement, and private equity will take them. They will remain, and for them, that's the best. So even though they can, for example, the exit we're working right now, which is in Holland, the CEO operator, he's going to make a bunch of money in terms of shares, but of course, the private equity is asking them to roll over a good portion of it, right? But I can tell you, if they do a good job in 5 years and they keep growing that company, in 5 years, they're going to make multiple of that. And that's the story we also want to tell also, right? Because that then attracts more talent.
Absolutely.
So we're trying to funnel the best possible talent and as much as we can absorb, because the issue out there, this succession issue, is huge, right? We have our own estimations, so we think that for us, targets in the next 5 years could reach around 1 million. in the areas and in the countries and continents we operate.
Yeah, I see it. And yeah, and let's talk about, because your model bridges that gap that's there, right? And so we talk about on the show a lot about EBITDA, right? As the hat says, and we talk about transferability and themed around, that exit or taking chips off the table. But really, the story after the deal closes really determines, what those multiples would be in the next transaction. And so what influence that are critical mass is your EBITDA, what 8 to 10 plus million of EBITDA, you enter a different threshold in terms of valuations.
And you have the succession risk eliminated, right? So you have what we call the succession risk premium that you come in is a risk, right? And I can tell you, look, I think, maybe about venture capital and startups, and out of every 10 deals, maybe one works, 9 goes south. Here's a bit the other way around, right? There's always going to be out of 10, maybe one that might not work well, right? But most of them will work well. Most of them will work. Right? Yeah. But you have to just make sure that you're doing the right things.
Yeah. Well, your lessons that you've learned and how you grow and scale these companies, sustain that growth too, because you don't want a hockey stick and then fall off. You want that to continue. And I think that the lever that you've implanted there is the operator, because the operator is continuous, or the CEO, let's just say, is continuous with that business. Correct. And your strategy will live within less than 5 years. You could be out less than 5 or at 5, but that business still has a trajectory and a path forward for the next 10, and where they could reach, acquire a $25 million company, take it to $250 million of revenue a year. That's a very real possibility.
Correct. Yeah. And you will have some of those, right? So you will have some home runs that you call, right? Some situations where the company will just grow exponentially. We have supported also add-ons, right? So we have done some acquisitions while they are still in the program. Sometimes we do that more or less at the time where we are also talking to a private equity fund. So that's funny also. But
it is. Yeah. Whether you consummate those deals or not, it's part of the continuity plan regardless.
Yes, correct.
Right? So you never leave money on the table or leave value on the table. Correct. There's ways still to capture that. But no, that's good. Christian, this is extremely insightful because, founders want to know, like, how do the private capital markets work? How do I show up? What do I look like? What do I have in my hand? What don't I have? Right? So on and so on and so on. But if you could give, for those tuned in, give one piece of parting advice to founders, to entrepreneurs, no matter what stage or in the journey they're on. But as they're thinking about legacy, when they're thinking about succession, when they're thinking about their next transition, what's that piece of advice, strategic advice that you would give them?
Well, I think my advice is keeping, and this is based on my personal experience and the experience that we have had in the last couple of decades, right? Doing this and learning about this is family-owned businesses, as long as they are in the family and run by the founder, are somehow in a safe situation, right? But that's gonna end.
Yeah.
When the founder will have to retire or be passed away or whatever. Yes. And the solution to solve that is not an easy one. It's not an easy one. Mm-hmm. And it's very fragile. Like I saw it with my grandfather's business. It took a few months, a beautiful business, to just go south. You don't need years. You just need a few months where nobody knows what to do because there's no decision maker.
No, you're right.
There's nothing. And those companies just go south. So my advice is that it's hard to keep them. If your children is not interested, don't push them to do it.
Correct.
It's the worst thing you can do. Yeah. Push your kids to do something they don't want to do because it's going to end up in the same place.
Or worse.
Right? So be humble. Here we are. We're just one. There's different solutions. We're one that tries to solve it the best way possible. Yes. And that's our goal, right? Is to try to solve the succession the best way possible. We think is by putting the vetted person that will be able to then run those businesses. And for that, because of the nature of these companies that are small in nature and so on, it's just hard to attract really the people, the talent. Think about this. You as a business owner, you are someone special. Like you're not any stupid guy that, No, you are a very smart business person that has created something that is sustainable and that has been there for many years. How can you replace that person? It's not easy, right? And that's where we think we should start.
Yes.
Like, how can I attract someone overqualified to actually run these type of businesses in order to make sure that they can overcome the replacement of that amazing founder?
Yeah, because they've been there, they've done that. They could take the business where they meet it and start it, or acquire it, I should say.
Yeah.
And then, but have the experience to take it to $100+ million in revenues.
Correct.
And they'll know what's around the corner. They'll know what's hiding in the corners. They'll know because they've been there.
And they will have the motivation to keep that company going.
Right.
They have that owner level motivation, which is very, very important. Not just to attract the best possible people, but also to motivate them.
Yeah.
Yeah.
Well, Christian, thanks for that parting advice, and thanks for the work and opportunity to work with you on the Horizon Underground deal.
Absolutely.
Massive success. The company is growing. I'm going to have you back on and Lance on in the future when that second trade occurs, because I'm very excited about that opportunity and that business. So
thank you very much for the invitation.
And if you want to learn more about Christian Malek and his firm, you could visit them at Novastone-ca.com. Some of you are independent sponsors out there that are been going down this path. You can look into his program. If you're a business owner looking for succession, they have a fantastic program for you as well. And but I really appreciate the time of Christian here today. Appreciate you tuning in and listening in to the M&A Guy podcast. And thank you for making us one of the top 20% shows on Spotify last year. Tune in next week. We'll bring you more insightful knowledge, thought-provoking content, and information. I'm your host, Brian Franco. We'll see you next week.